press release from Nigeria's Debt Management Office announced that Nigeria has redeemed a $500 million Eurobond due July the 12th of 2023. According to the statement on its website, the DMO, the bond was issued back in 2013 for a 10-year period, coupon of 6.375. We'll talk about what that means for the message it sends to international investors. Another message for international investors, Treasury bills. Let's take a look at T-bill auction, primary market rates. Oh, Lord. So, stop rates, they're 2.86% for 91-day, 3.5 for the 182, and the 5.94 for the 364-day bill. Let's talk about that with the man himself, Ugodre Obi-Chukwu, founder, chief analyst at Nairametrics. Great to have you in the studio, sir. Good morning.
Finally, man. Good to be here.
Finally. I should keep you here for 1 hour. Ugo, you're very welcome. What do you make of those returns on T-bills? I mean, you are deep in the investment. Nairametrics, that's all you guys write about, plus everything else in the capital markets. What do you make of those returns?
I mean, negative real return. Yeah. Inflation rate is at 22.4%, and 1-year treasury bills at 5.9%.
Yeah.
So it appears, investors are happy to take negative real return rather than maybe invest in more riskier assets that would give, positive real return. So I think to me, it just goes to show how much cash we have in the economy today, and the data is there. If you check later CBN data for May, the amount of cash that we have currently is about 55 trillion money supplied as M2, 55 trillion. That's a whole lot of money, and we've never seen anything close to that, even though it did drop a little bit from the month before, but we've never been at such levels. So there's just so much money out there, and there's just so much equities can actually take. So for investors, they're like, where do we put this money into? We can't put it in the capital market. Capital market, total market cap is like 35 trillion. Right, so you're not going to put all that money in there. So that money has to find somewhere to go to, and essentially that's why you're seeing it go into treasury bills. Not just treasury bills, even the FGM bonds also attracting a lot of investment inflow from institutional investors. And interesting thing is that if you look at that treasury bills data, I think it was even oversubscribed by about 30%.
Subscription was massive.
So there's a lot of people ready. I mean, just think about the people ready to stake hundreds of billions of naira.
364, exactly. 654 billion to 137 offered.
Yeah. Exactly. So they are happy to stake that much for 1 year, 5.9%. Just because there's just nowhere else to put that money into. So, and that's also a problem, for the forex market, which I guess maybe you get to later.
Yeah.
Because when you have so much money and going in treasury bills for just 5.9%. Even though inflation is 22.4%, it just goes to show that there's just a huge dislocation currently with the Nigerian economy in terms of where investment inflow should be going to. Okay,
you mentioned the negative real return, so subtracting your inflation from that. Yeah. So how do you attract investors in? With
investors have made that claim as well. They've said, look, guys, we see what you're doing. We like the fact that the exchange rate is now on a managed float. You don't have multiple windows. Windows are unified.
Yeah.
There's still a lot happening in I&E window that they like. But guys, man, I'm not going to bring in X amount millions of dollars or 10 or 20 million dollars into your economy at this sort of interest rates, right? And when these guys come in, they tend to hedge. A little bit of money goes into treasury bills, short-term securities, some go into stocks, and they kind of hedge. But what would you do, Rose, if you had $1 million? Are you going to put that in Nigerian equities, or are you going to put it in maybe US bonds or something?
Because return,
exactly, US inflation rate is going at 3.0%, right?
Yeah.
So compared to Nigeria, 22.4%, and yet risk-free securities in Nigeria is about 5.9%. So a huge dislocation. I don't see how that is so much of an incentive to foreign investors. And again, like I said, the capital market, that's the stock market, is a little shallow. So there's not just so much that can go in there.
Yeah.
So in terms of convincing investors to come in, it's going to be difficult. Some have muted. Maybe perhaps we go into what we did in 2017-18, which some of us called share banking, if you remember, where we're basically offering huge interest rates, for Omo bills.
Yeah.
And that kind of kept the exchange rate stable for a long time.
But it was
very costly, very expensive because those bills were going for like 19, 18%. But even at that, inflation rate was below that number, so it was fairly okay. But now you're seeing inflation rate at 22.4%, and that's May. Only God knows what's going to happen in June. So there's really no incentive for foreign investors to come in at the moment as things are still unfolding.
Wow. What do you make of the bond redemption for the 500 million?
Fantastic. I mean, just shows that, hey, Ghana, we're doing well. We're paying our bills, so it's not easy. At least just shows that at least we're redeeming. I think we've done about 1.8 or so, billion dollars so far since 2018. So that's good. There's no more redemption, I think, until 2025. So a bit of a breather for the Tinubu administration. But I mean, it's good for foreign investors. At least they know that we're able to pay our bonds. And one thing that you got to also give credit to DMO for is the way they've sort of spaced a lot of all these bonds. So redemption is very well spaced, enough to accommodate Nigeria's cash flow. So very much compatible with our cash flow for now. So it's great, and it's good that we're paying. So, but I don't think that we're going to go into that market anytime soon. Rates are not favorable at the moment, and of course there's still a lot of fiscal issues to deal with locally. We do need those dollars, by the way.
Yeah, we do need
them.
Yeah. Okay. What about? Can we please talk about our debt levels? I mean, since we're talking about debts here, is that not still alarming for Nigeria?
Well, it depends on how you're looking at it. People would tell you, if you look at it from a debt to GDP perspective, that it's still, reasonable. Yeah, I mean, we agree. But by the time you start to add ways and means, you start to, be worried. I think it's over 80 trillion if you add ways and means. But the problem with debt level is actually, debt service, to revenue ratio, which is hitting 100%. And that really is the problem. Can we continue to service those debt? And they are pretty expensive. Or are we going to see a situation where, the government will want to refinance the entire debt? That is what it's looking like, except maybe revenues go up. And a lot of those debts are in Naira, which is a good thing. So the dollar component of our debt is huge, a whole lot less than the Naira component. So on the Naira wise, there's a lot that the government can play around with. They can reissue some of those bonds, maybe spread them longer, just so that we can have enough breather. But in terms of debt level, I doubt that you're going to see more debt. That's not the way out. Which is why a lot of people are worried that this government is likely going to be going after taxes because taxes and making sure that oil export proceeds come back into the country, so such as like curbing oil theft, and then of course I heard you earlier talking about oil prices. So as that continues to go up, you'd expect to see them focus a lot more on making sure that we get our fair share of oil export revenue. That's what's very important for now. Yeah.
Excellent point. All right, this is one of your favorite areas, the NGX, the stock market. I was reading a note from one of the research houses saying that since the inauguration, the NGX is up about 25%. But yet today it's also double digits. What do you make of the performance so far? Is it a bubble? Some have said, well, in dollar terms, it's not that impressive. There's so much to talk about here with the NGX. So where do we start?
Bring dollars in.
Don't bring dollars
Anybody
in.
who's talking about dollars, please leave dollars out of it. This is the NGX. It's in Naira. It's not in dollars, right? So it's in Naira.
Fair enough.
It's in Naira. Because if we get dollars in here, we're all just going to feel bad. If you like, even if you convert your salary to dollars, you feel bad. Okay, so let's just leave that, right? Exactly. Good stuff happening.
Yeah.
I think there's fear that there might be a bubble somewhere. But this is actually very different from maybe 2018 when we were at this sort of levels. I thought that yesterday we were probably going to cross the all-time high. All-time high was probably 66 or so thousand points. And we were very close to it. We did have it receded a bit yesterday. Likely going to recede today again, the way things are going.
Is that profit taking?
It looks like profit taking. Okay. Yeah, it looks like profit taking as well, because a lot of people are basically coming and they're going up. But it's very different. The last time was driven by massive margin loans, if you remember. Then you could just easily go to a bank and take money and invest. And a lot of retail investment, retail investor inflow also coming in as well. And the knowledge wasn't really there. But it's different now. It looks like it's institutional play. Retail investors are also getting into it as well. So there's no margin lending. This looks like it's people's money. People are actually putting in their money in the market. And then on the flip side, fundamentally, price to earnings ratio for Nigerian equities is I think about 11 times or 12 times as well earnings, which slightly higher than sub-Saharan African peers, but still manageable. We traded at 5-6 for years. So now that's what it's looking like. But my concern, though, is if you look at the entire market cap, NGX, 35 trillion or thereabout,
right.
7 companies, which we call the suits, Nairametrics stand for stocks, worth over 1 trillion.
Yeah.
So there are like 7 of them. GT and Zenith just joined, the 1 trillion mark. They represent about 66% of the entire market cap. Just 7. And you have like 160 stocks out there. So just 7. Yeah. So when you look at that, you're like, you gotta be careful here, because whatever happens to those 7 stocks could, affect the entire market, which is not good, because you want to have a lot of bigger players in there. Then on the flip side, you can also think maybe there's room because other stocks still need to also grow in terms of market cap. So I'm trying to be a bit careful. I've been telling people, like, be careful right now. The economy is not so good. Yes, you're seeing a lot of the stock equity market is usually a bellwether, but the economy is not so good. Inflation rate is likely still going to go up. You can see what is happening in the exchange rate. People are, subsidy removal has been done already, so people are grappling with a lot of issues. You're seeing prices go up, purchasing power is down. So companies are likely going to face serious headwinds down the line. Banks might do well because of course, FX valuation and stuff. But for most, companies, they're going to struggle. And the feelers that we're getting from them is that, man, it's not easy. We're struggling. So likely, profits are likely going to decline third, fourth quarter. Right. So if that happens, how does that justify the valuations that we're having at the moment? So those are the things that investors have got to look at. Be very careful. Don't just go in there blind, right? Because you might be the one carrying the bag. And also try to understand why equities are rallying. Is it because fundamentals, or is it because of people just trying to go in there, just to make some money and get out? So you have to be careful. But all in all, it's good. It's not really only in Nigeria, the US as well. Equity markets is jumping there as well, and most other countries, even in Egypt, South Africa. So it's good that Nigeria is also experiencing, but we got to be careful.
Ugo, I could listen to you talk about the exchange for the rest of the day. Just great stuff. Thanks for the breakdown. I can't let you go without talking about FX. Our good mutual friend in the pension space wanted me to what your FX outlook. We've had him on the show already. Your FX outlook, Ugo, with what's been going on. Turnover, it looks like it's been climbing, but below the average from pre-pandemic levels. What do you make of it, the FX outlook? I mean, liberalization, So.
Fantastic. What is happening now? You know that there's no arbitrage. You know that everyone is competing at the same level. So it's not like you've got people buying at 400 and then some other people buying at 7 something. So we're all at the same.
As the INE
window. Yeah. So sort of level things up. CBN issued IMTO note yesterday saying that you can actually get dollars and convert to Naira at INE window price. So that is all good. But there's a huge dislocation that we're seeing, a disparity, between the INE window and the parallel market rate. On the P2P market, which we also track, you're seeing it at about 810. Black market, you're seeing it at over 800. INE window is now moving closer.
Right.
Now, what that suggests, Lotus, is that there's still a lot of supply or transaction happening at the black market end of things, because a lot of people still can't access Forex as much as they want. And then liquidity in the INE window is also not that great yet. We're seeing turnover numbers pick up, but not really stable. And like we said earlier, there's not a lot of Forex coming into the country, because the capital importation is still pretty down.
Right.
And so I don't see the exchange rate holding up for strengthening anytime soon.
Right.
It's summer as well. I'm sure you're probably planning a trip. Who knows?
I get a vacation,
So a lot of people are, and then you're now going to come into the jackpot season of August, September, when the next wave of jackpot is likely going to happen. So, and these guys, the way the jackpot is that they sell everything, and then they need to buy dollars, so that they can now, travel with it. So there's a whole lot of demand pressure coming, and I don't see where the supply is going to come from. Like I said, supply typically comes from, from export proceeds, from diaspora remittances, from loans. Those things are not happening anytime soon. Foreign portfolio investment is not coming in yet, because we mentioned interest rates. So when you put all those things together, you tend to think that there's still going to be a lot of pressure on the exchange rate in the near term. Can it be better much later? Yes, that is why we have a managed float, because managed float means that demand and supply and price discovery is better now. The market is determining what will happen. But the prognosis suggests it's nothing close. I've argued this with a lot of friends who've probably been here before as well. Some people think it's probably going to be, below 700 and all that. Maybe that's the right price. But man, look at your inflation rate. It's at 22.4%, probably going up. Right. So when you look at that number
and then you look at the US inflation at 3%, do the math. It's looking like there's going to be pressure, because if you have dollars, you want to demand more naira because of what the inflation rate is doing. And that really is the issue here. So for me, the government has just got to, focus on restoring confidence of foreign investors, because we do need those inflows coming in anytime soon. And of course, try to sort out the issues at the creek where a lot of our oil has been stolen. Because the more inflow we get, then the better it is for the naira.
Ugodre, of course, founder, chief analyst at Nairametrics. Ugo, fascinating conversation. Wish we had more time. Thank you so much for joining us. Appreciate it.